I was going to say good, well, I guess it is still the morning. Good morning, everybody. Happy Friday to you. Lost one, Pete, Doug, and Easy. Good morning to you. So yeah, we're flirting with the idea of a reversal here. Might be a little too soon. We'll get into all the reasons why, but yeah. So thumbnail today is little Pepe face with an Uno reverse card. If the market's nice, we'll end up doing a reversal. Well, I mean, we've kind of already bounced pretty good. But ultimately, if the market's cool, we're going to maybe transition the market into a long going into next week. We kind of already went long today. But again, it still might be a little too soon. It's not the greatest looking setup of the market for a reverse, but as the story normally goes, once the market starts to get over the 50 SMA, you kind of have to start, playing that side and looking for things in that direction. So yeah, we'll kind of get into it. So we have been obviously on the downside, just like yesterday. Came on real quick for about 20 minutes or so and said, market's just negative. That's pretty much it. When the VIX starts to go negative, that's where we'll more likely see kind of the long pressure on the market, which started happening today. Wasn't the most straightforward breakdown in the VIX and what have you. So again, if the VIX plays nice kind of for the remainder of the day and going into next week, then again, we'll probably see the markets press more on the long side. So yeah, we'll get into it. So we'll start with kind of first things first, SMA trend, right? See how a couple days back that was on, was that December 27th? Yeah, looks like so. Yeah, December 27th, the market broke down. So we've been on the bear side of the market since the 27th of December. It's January, 3rd? Yeah, so January 3rd today, we had a gap up. So obviously we went for kind of gap and go tactics. We'll get into that. And the market is now kind of just flirting with getting over the 50 SMA. You got 3 wicks on the top of this market, which isn't the prettiest looking thing. But ultimately, the market is currently over the 50 SMA, and the VIX is currently below its 50 SMA. So pretty much this story will be if the SPY maintains the 50 SMA and the VIX does successfully maintain below its 50 SMA, we'll continue pressing the markets long for today. And then into hopefully next week. All right, so that's why the thumbnail today is no longer Pepe crying with the market dumping, and it's Pepe with a little face saying Uno reverse, because today's a day where we could arguably start talking about that. It would make sense to. Are we going to be entirely correct? We'll find out. Time always tells, right? So we'll get into kind of why the thumbnail of today's video has changed to a reversal with a little Pepe smirk face, and why the title says stock market flirting with reversal, VIX attempts to go negative, and retail is stumped as per usual. All right, so number one, we were bearish since the 27th. As far as trend, today's the first day where we are gotten some candles above the 50 SMA and arguably some closing above the 50 SMA. All right, so that's the first time we've seen that since December 27th. So we know that obviously there's been some participation on the bear side. Today's kind of one of those days where we're starting to get a little participation on the upside. So now we'll get into the VIX. All right. So the volatility index has been kind of on the upside and kind of awkwardly on the upside, if you may, right? We broke over here, a little flirt below, then bounced, and so on and so forth. But you can see today, and let me actually take off this text. Well, yeah, the VIX is now negative. Again, good for long skis. So basically, now that the VIX has broken down, it's starting to roll below that 50 SMA. When that starts to happen, it's more likely that the markets can increase just because volatility is starting to decrease and get shrugged off. Again, that has nothing to do with false breakdowns. I'm not talking about nuances of the market. We'll just say that everything is super easy and everything works perfectly, and we're not going to say, oh, well, maybe there's a back test here, and then, well, maybe it's a fault. No, just stop, right? So if, again, the VIX is below 50 SMA, that's where you have to start kind of thinking it can be turning to negative territory, where that means volatility will decrease. And if volatility decreases, then the fear subsides. And if fear is not in the market, then generally markets go up, right? When there's fear in the market, generally markets go down. So over the past, call it week, right? What happened? The VIX broke over the 50 SMA, volatility increases, fear increases, markets go down. And then it went up and came back down. And just yesterday, remember yesterday, about like 12 o'clock, how the market got smacked to the downside? So right here, you'll see yesterday where my cursor's at this 11 o'clock candle. Oh, my time's off. That's 12 o'clock. But anyways, so right there, right, you can see we back tested the 50 SMA and then blew up, right? So really what this was, it was pretty much a VIX back test of the uptrend and then long, which then shot the market down yesterday, like mid-morning, midday. All right. So yesterday's big pullback was really the confirmation of a long trade on the VIX. So the confirmation of fear being supported on the volatility index allowed the market to get thrown down. All right. This morning we have, broke it down, flirted with it, and now we're below. So essentially, in real time, fear is subsiding, right? Does that continue? We will find out, right? But if you look at the chart, literally the fear is slowly subsiding. It's going away. It's retreating, all right? So fear retreats, optimism comes back. How long that lasts, again, that's for the Houdini, right? So the market is currently situated in such that VIX is starting to retreat a bit. The market is starting to get positive, and if that continues, then today can arguably be that start point where we can throw up a new thumbnail and say Uno reverse, right? So let me delete some of this stuff off real quick. Hold on. Come on, chart. There you go. All right, so yeah, let me bring back up this guy here. All right, so let's get into kind of the start of the day. So pretty much the whole approach for us in the private stream was to be long bias, kind of going into the morning out of the gate. So our targets for the long today on SPX, obviously we have a gap up. So when we have a gap up, we're going to fib to the upside, the overnight impulsive move. And our first target is generally going to be the 161, which is right there. So that was our first desired long target today, 161, which is a price of $5,904.87 on the market. All right. Also, targets that we were looking at would be moves back to the 50 SMA. So right where I put that green line, the 50 SMA, I'll put a little box there. That would also be it. So it just so happens that the 50 SMA lined up with the 161. So kind of like double catalyst to go there, right? Looking at SPY, right? SPY had its 50 SMA right there, which is, 588.33. So to start the morning, we were initially looking for the markets to push long out of the gates to at least attempt getting over the 50 SMA, going to the gap target. So our targets, again, overnight gap, 161 and 50 SMA. Those were achieved pretty much right into the morning, all right? So ultimately, we have the volatility index going back to negative. We have the market starting to transition back on the positive side of things. If it works, it works, and you'll see the market's going to a long. It's pretty straightforward. There's a couple other nuances we can get into, like right here, this 590.11. If the markets are really going to pick off into a nice long for the remainder of the day, and or into next week, it's going to be built off the back of a breakout over $590.10 on the SPY. And hold on, I took it off 1 second. And we've already gotten over the SP. Wait, no, that's wrong. Hold on. Yeah, so pretty much right now the long targets for me, for this press, are into 5,925.65 for SPX and $590.11. And only if we can start getting through that should we start to really squeeze short sellers that have been participating in the market since Friday, December 27th. So again, this bearish move that started Friday, December 27th, we need to get through 590.11 to really start triggering those sellers to get squeezed, right? And as a result, we'll look higher then. But again, right now you can see we gotten through the 50 SMA, so that's positive, right? That's good for the market. You will also see when I take you to the chart on the upside, the VIX is now below its 50 SMA, so volatility is retreating, fear is slowing, all right? And then if we track the last sell move from Friday, December 27th, the short squeeze start point over under is 590 on the SPY, intense 590.11 or so. All right. Then the target of our 590.11 breakout, if successful, is going to be, that's not right. Wait, what am I doing wrong here? Oh, it's already on the chart. So then the target of that, if successful, will be into 594. So arguably going into next week, we'll look for a $594 target on the long side, which again has to come, which sounds dumb, but it's like, yeah, obviously if the market breaks out and it goes up, then like obviously you'd go up to prices that are above you, but we don't start looking for a price point of about 594.50s until we break out 590s, right? So that's kind of the thing here, is that the markets are getting positive here over the 50, but it's just a long to 590. And then if 590 holds resistance, then, you know, it holds resistance. So it's ultimately we're long from here to here, and then we have to get through that, and then we'll trigger a really good long move. So that's kind of like a, yeah, I mean, there's a lot of people that use the 50 SMA system, but there's not a lot of people that use sell signal volume weighted average prices the way I do. So it's kind of an additional layer that I built on top of the SMA system that gives me, I think, a little more edge than those that just use the SMA system. So yeah, anyways, so yeah, we're basically slightly long biased, been long biased today, and for a really good long to take off more than what you've seen, it's going to have to come over 590. So 590 can still be a big resistance point because it's the previous sell move. So another way to think of this is that when you have a previous sell move in the market, like we just did, that happened on Friday, December 27th, and then the market starts to get positive over the 50 SMA, it's not a done deal. It's a done deal when you break the volume level of the previous sell move, right? So this could still be what we say is a false 50 SMA long, in the sense that yes, the market goes long over the 50 SMA, but it can just top out right at 590 and then kind of do whatever it wants to do. When the big long gets triggered, it's because short sellers squeeze themselves out. All right, so the market is starting to go a little positive, but again, it's all going to have to, for a really big long, it has to go over 590. All right, so that's pretty much that. Yeah, I mean, the other little, I think, interesting part of today that you guys should kind of look at and slightly learn is this. So I'm going to go into a 1 minute here. All right, so this morning you'll see that the market pressed into a long and then it rolled over and dropped. Oh, Boston Tom. Been a minute. Yeah, hey, thanks. Yeah, for a long time, YouTube, someone, those, I don't know, they wouldn't let me stream. My computers wouldn't let me stream. Someone just knocked me offline every time I try to stream. Not really sure why. Who knows? So somewhere, someone have allowed me to start streaming again. We'll never know why. Just like we'll never know how many licks it takes to get to the center of a Tootsie Pop. All right. So this is a good one here, right? So see how the market pressed up into a long earlier, all right? If you look at the market internals today, you will see that pretty much no market was performing long out of the gates today, but the Fang stocks. So here is the Fangs. This is a combined ticker of Apple, Microsoft, Amazon, Meta, Google, Nvidia, Netflix, Tesla, etc. So you'll see that this morning starting, all of those were performing really well. So it was really, this early morning long today was really all built off the back of the Fang names. And if you look at the rest of the market really didn't do anything. You had really flat to decreasing, or sorry, flat to declining issues amongst the NASDAQ 100, NYSE, SPY, etc., etc., etc. So we know that the early morning long today was built off the back of the Fang. This also helped direct everybody into a pullback, which was, hey guys, the market's going up, but everything else is not. So, or sorry, the Fang is going up, but everything else is not. So as soon as the Fang starts to get some weakness, you're going to see the markets pull back, right? Anyway, so that's another little tidbit of information there for you. So yeah, basically going into next week, this is really just the whole story. We need the VIX to remain negative, and the markets will press into a long. You need the markets to maintain over the 50 SMA, and they'll continue long. The flip side is, okay, if the VIX comes back up and starts to get back to positive, then we're just going to look short. If the markets break back down to 50 SMA and the VIX gets back to positive, you're just going to be short. And that's pretty much it. Done deal. Owl says, sorry, yeah, 2 licks and a crunch, right, if I remember correctly. So yeah, I wish there was more to say, but there's really not. That's pretty much it. But yeah, like I said, I wish there was a little more to say sometimes, but again, it's like I said, it's just a rinse and repeat strategy. We had the gap and go today, 161. Market got a little positive, kind of chopping. It's not, you can clearly see the market isn't accepting the buy signal right away. So that tells them they're probably just going to do some scummy trading and whatever and try to be tricky with it. So just sit back and just kind of chill, let them do what they want to do, and markets will do as they please. But you're not supposed to be short bias the market unless like you're trying to do a counter pullback, right? So generally the story always is that once the market is above the 50 SMA, you're usually supposed to be, well, not usually, you're long bias above the 50 SMA, right? And then once the market breaks back down, if it does, then you can start looking back to more of the bearish metrics and things, so on and so forth. Another thing to kind of consider too is that you have a really big gap up today. I won't say it's really big, but it's a gap up, right? So that's another thing. It's not as easy just to trigger big buy moves over the 50 SMA when it comes off of a big gap, right? So the market gapped up already, then ran, then to break the 50 SMA, and then keep going. That's kind of a challenging thing to do. So I would say it's not the greatest setup for the markets just to just straight force long. But yeah, and the flips, and you can already see we're the market's coming back down to back test the 50 SMA right now. So this is, it's almost there, right? So we can even zoom in. All right, so what's going to happen here is pretty much, you see this green line at 588.12. This is where we'll see if it happens. I really could care less what happens, right? As far as this, but that's the over under 580.11. If the market does not want to stay into a long, that's going to be the re-breakdown point. Kind of like you saw earlier in the day. You saw how like right here, you actually can see see how it gets over, pumps, drops, snap down, right? Over, pump, drop, snap. Over, up, down, snap, right? Not that that's gonna happen, but like I said, generally that's pretty much it. I literally wish there was more to say, but there's not, right? That's it, fam. Oh, blank screen. Oh, that's sorry. I'm on the wrong screen. I forgot. I got to transition down to this one. My apologies, guys. Sorry about that. I feel like a dummy. Where was I? Yeah, maybe it was I was probably right here while I was doing this whole thing. So yeah, again, you have a big gap up today. There's a 50 SMA. When you gap up, and then try to press over the 50 SMA, it could be a little challenging to do. Like I said before. And then when we zoom in here, this green line, like I said, that's the 50 SMA. So if the market gets acceptance above, the market's going to rally into a long. That's pretty much as the story always goes. So you can see, like I was just saying, when you're above it, you break out. When you get below it, you kind of have that harsh drop. So you can see how it's being used as the over-under, right? Yeah, pretty much it. And of course, you can kind of keep stacking things on top of that and stacking things on top of that if you like. But again, the market really just works on an over-under basis from bullish to bearish, positive to negative. Today we started flirting with getting back to positive, and we'll see if it lasts, right? We'll see if it lasts. Bitcoin, you know, saying, I don't know if we went over this last stream, maybe we did, but again, Bitcoin, our targets are, damn it, worst timing, just the worst timing. All right, we're just gonna chill for a second. You guys just hang out. She's gonna do this whole vacuuming thing at the worst time, and I will be back on. All right, I think we're in the clear. So yeah, back over to this guy. Yeah, so Bitcoin, again, targets on the upside are that. My micro pullback targets were down to here. It looks like the market caught a bid, probably around the 30-minute scale. Really just something I wasn't, you know, I'm not even going to get into that. So yeah, but anyways, our targets on the upside for Bitcoin right now are pretty much 98,800, 99,300. Pretty straightforward. When I say those are the targets right now, it's not that I don't foresee Bitcoin going higher. It's just, again, that is based off current market structure. It would make sense to go there. We can screw over a bunch of people that have been bearish on the Bitcoin market since the pretty much the all-time high. So pretty much anyone who shorted from the all-time high and then shorted through the drop, by going up to 98,800, 99,300, we'll basically just give them a big old middle finger and say, ha, screw you, right? So that's generally what the market likes to do. The market is a game of basically going back and forth, bending people over and spanking them. So effectively going up to that 98,800, 99,300 will essentially take that little teddy bear, bend them over and get a little psh, 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 right? So that's the objective here, all right? So get a little baby powder on that and psh, 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 psh. Yeah, that's it. Then going back over to the SPY, all right? So yeah, I mean, it like I said, is this the greatest setup? I mean, the gut is already like, it's kind of meh. You know, we'll see. I've seen crazy things. You just gotta let the market work out. Sometimes you can think things don't look great and then they end up being great. Sometimes you could think, you know, it's great and then it ends up not being great. Again, it's just the market is controlled by algorithms, right? You know, I mean, look at it right there. I mean, the market, they just dropped the market right back down to where? The 50 SMA. There's your little bounce again. So algorithms, they control the market, you know, along with high frequency trading machines and things like that. So, you know, I want to keep things as simple as I can. So to keep them as simple as I can, it would just basically be, as long as the market is over this 50 SMA, we have the potential to go up. As long as it's over the 50 SMA, we're not going to look for bearish moves down. And then as long as, again, the volatility index, which I just transitioned to, as long as the volatility index is below $17.40, volatility is retreating and we're going to look to be long the market. So I'm trying to not want to say care less about what things look like, because again, there could be a red candle and it looks bad, and then all of a sudden the red candle goes green and then it looks good. So just gotta let things play out and we'll see how it pans out, right? One way or the other, again, it doesn't even really matter to me whether we go up or go down, because we just follow the system. So it's not like, oh, the market has to go long because I said it's long. No, the market is telling me you should be more in the long attempt right now than you should be the bear attempt. And then if it triggers back to bear, then you can be bearish, right? So and that's it. The over-under is 588.12. The one thing I do want you guys to take away from this is that it's generally hard to get a market to break away from a 50 SMA when it's so negatively sloped, right? So that's kind of the little thing that's iffy about the current scenario right now. But like I said, the last thing I'd want to be doing is shorting the market while it's above the 50 SMA and while the VIX is breaking down the 50 SMA. If I was looking at the market right now, I'm like, I want to short it, then I would just wait for it to break the 50 SMA and then hopefully see the VIX back over the 50 SMA, because then you kind of have things working in your favor. Or you could have done something like that, right? So say you're like, oh, I think the market's going to break down, right? And then say you did short right at the 50 SMA, then you get pushed out, right? Or you could get pushed out, and so on and so forth. Or say you're like, oh, the market's going to break down, so then you short a top, right? Well, say you short a top, and then it holds a 50 SMA, and then we just, boom, right into the long, right? So, again, it's not favorable to be shorting right now unless you have, for whatever reason, that you can determine that you know more than the market, right? If you're smarter than the market, then go short. If you're not, then follow the market. And the market says, don't be short. It says be long. Even if it looks shitty. Well, what if this? Well, I don't know. What if I was married to Megan Fox? Who knows? Things would be different. But they're not, right? And I'm not. So yeah, that's pretty much that. I don't really have much more to say. JP, 50 SMA. 50 SMA on the 30-minute time frame on a regular trading hours chart. So you're going to turn off all your pre-market. So you're going to turn off pre-market. You're going to turn off extended hours. Pre-market, after hours, you're just going to operate on a regular trading hours chart. Which is, yeah, that's it. Regular trading hours chart, 50 SMA. And if you want some context, I'll just zoom out for you and you can pretty much see what I'm talking about. Excuse me. Side note too. Well, no, I don't want to talk about that. It's just gonna be too much for you guys. And I will say sometimes I do jump the gun on reversal longs because I get excited about it, and then it's like it takes a little longer. But there is a good thing about. Well, no, not really. I'm gonna say. Let me phrase that. The longer a sell move lasts, then the bigger the long target becomes in the future. So it's kind of like a catch-22. It's like, yeah, you maybe want it to reverse and maybe things to stop going down. But generally, the longer they go down, then the greater the long target is back up. So it's kind of like a catch-22 there. But anyways, yeah. I could actually show you probably on the last one here. Nah, I'm fine. Most seen bottoming signal. Most seen bottoming signal. Yeah, I mean, I guess it depends if you're thinking of bottoming as like legitimate, like absolute, like for example, if I put a box on the screen here, if this is what you're thinking as like bottoming signal, or if if that's what you're thinking, that's more like reversal signal and oversold metrics. I wouldn't really say there's a signal for it. Well, there's always a signal for something. It just depends on how you interpret things, really. So if you're talking about like low something like this, bottoming signal, there's really not like a moving average I use for it, not generally, but if we're looking at, it just generally some sort of support, that could be a volume weighted average price. Let me just see if you comment. Yeah, so for me, really the reversal signals, the ones that I like the most are going to be the volatility index. I love when the volatility index goes negative, just like it is today. That's why I am long biased the market. Because the volatility index is saying the fear is going away. So I'm on the right side right now. It's favoring. If fear is going away, then it's going to be easier to reverse the markets long, right? Now, this down here, right? If we look at this move down here, hold on, my brain's starting to work. So yeah, if we look at this move down here, there's a couple ways. So a lot of it's the volatility index. So I'm trying to think of the easiest way to kind of teach this. It'd actually probably be good. That might not work that way. All right, we'll start like this. We'll start from yesterday. All right, so let's go back to the VIX. Where is that at? Yeah, I must have moved it. So if we go to the VIX, right? So some reversal signals that work well is bottoming the VIX, right? Or let me take you back to, I think, the last example. I might have to go back quite a bit of ways for this. I don't know if this is going to be like this easy to find on the chart. Here we go. So this is another reversal signal I look for. So this may not be, we'll just put it simply, right? So right here, look at this part of the chart. You see this rejection at the 50 SMA. So this was months back on the volatility index. All right, so months back on the volatility index, we had a rejection at the 50 SMA. So walk through just envision what the stock market might look like. We're not going to look at the SPY because we'd have to go back so far, and maybe we will, but just in your head, look at the VIX and just kind of think to yourself what the market might look like, all right? So the volatility index breaks down the 50 SMA. And JP, when you ask the question about 50 SMA on what time frame, it's the same thing here with the VIX. This is a 50 SMA on a 30-minute time frame with no pre-market or no after-hours data. The 50 SMA calculation and location will change drastically when you're not calculating after hours. And oh, sorry, wait, blank screen. Sorry, yep, I'm a dummy. We didn't go too far. That was good. See, the problem is I have hotkeys and like I'm kind of switching back and forth. So let me just not move my charts. We're not moving the charts anymore because in our private stream I can't use the hotkeys, so then I have to drag the charts. But on YouTube I can use my hotkeys, so then I can just flip screens. So I kind of get like So all morning I'm always dragging screens, but then when I come to YouTube, I don't have to do that, but then I think I still do. So I'm sorry, guys. All right, so you should be looking at the VIX. 1 second. All right, so looking at the VIX here. All right, and I'm going to point to it right there. So back there, that was a 50 SMA rejection on the volatility index. So when you asked about reversal signals, this may not be like what you would call an, well, it probably is, but a couple ways to think of a bottom. So that's a reversal signal for me, meaning that the volatility index broke down. So when that happens, the market's going to go up, right? Because as the fear goes away, the markets rise generally, right? So follow me, right? So we're going down. The VIX is going down. That means the market's going up, right? Then all of a sudden, the market decides it's going to top a little bit and pull back. So then you see, so now think to yourself, this whole way, the SPY is going up because the VIX is going down. And then who knows, whatever reason, blah, 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 the market starts to pull back a little bit. So then the VIX starts to rise, right? And it rises to where? It rises to its downtrend, 50 SMA, and then it rejects, and then the VIX continues down. And as a result, the market bottoms and goes back up, right? So I use the volatility index downtrend retests as a bottoming signal for the VIX. So when we get a scenario like that, it's not going to be like the one you see here on the screen. So let me go back to this screen. All right. So this is back to TradingView. So in this here, so like that's a bottom, right? There's a bottom, but that would not be a bottom that you could kind of figure out based off of what I just showed you here with the VIX. All right. And the reason why is because the reversal and bottoming signal that we're using based off the VIX, it would come as the market is actually going up and then it pulls back and creates a higher low in an uptrend. So the example that I'm showing you with the VIX as the bottoming signal, that's a bottoming signal to catch a higher low in an uptrend. All right. The one you just saw here, like today or whatever that was, yesterday, or I'm all tripped up on the days from all these goddamn holidays, and because I'm just working like a dog on my rental property right now. I'm sleep deprived, but so what you just saw yesterday, that bottom signal had, I don't want to say had nothing to do with the VIX, but it's not the same scenario. So there's a couple different ways you could do bottoming signals. So the one that I really like is the VIX. When the VIX enters a downtrend, the market goes up, then eventually the market cools off, it pulls back. As a result, the VIX starts to go up, and a lot of times what it's going to do, like I said, it's going to back test that 50 SMA. And if the VIX confirms the downtrend, which would be back test 50 SMA, confirm downtrend below 50 SMA, that means the VIX will reject. And then what we're doing is we're longing the market because of the signal on the VIX. So it's like we're not even really, it's not that we're not concerned with what the market looks like as it's pulling back there, but it's like our attention is really on the VIX, and it's the VIX that's creating the catalyst in that moment. And yes, in that moment, the market and MACD might be oversold and the RSI might be oversold and all these things, but it's like we're really using the VIX market in that moment to then bottom the market, right? Now, the reversal that you saw yesterday, all right, I wasn't even watching the market at that point, but I'm already assuming, right? So this bottom here, that could have been off a support, it could have been off of volume weighted average price, it could have been off of Fibonacci. You know, the VIX could have gotten too high and then hit some standard deviation resistance. It could be like a numerous amounts of things, right? And I just don't know because I really wasn't even watching at that point. So I kind of have to go back and start kind of figuring that out. But if you ask me, there's off the top of my head, the reversal signals and bottoming signals I like. One is the VIX rejection once it enters a downtrend and then back tests. The other kind of bottoming, I wouldn't even call it a bottom signal, but it's a bottom opportunity, comes from either sometimes buy signal volume weighted average price levels, arguably 50 SMA back tests, just like the you saw in the VIX. So instead of it being the VIX, right, it's the market gets long and back tests the 50 SMA, which would look like, let me find one right here. So this would be another one. So when the market goes into an uptrend like this, and then it back tests the 50 SMA, that's another bottom opportunity. All right. And then the other one is lower distribution oversold, which I don't even know where I'd be to find one of those. That one doesn't come as often. Yeah. So I hope that helps. Yeah, I hope that helps. But I would say that one, the VIX, is arguably my favorite. Oh, I think I was, yeah, I don't know if I was sharing the right screen there. I'm flipping screens so much, but anyways, we'll get back to TradingView here. So that's it. That volatility back test, I really like that one. When and it doesn't always work. And let me explain. Let me show you. I'm going back to the VIX chart again, and I'll make sure that I'm on. I'll just double check. Yep. All right. So now we're back on the VIX because I want to show you, right? So look at how clean this one was, right? We broke down, back test, boom, right? And I should actually show you the long that created, because that would help you to visualize what I mean. So let's find that. What day was that? That was a Wednesday. I don't know. It's always kind of, I wish they would give the dates when you're in a lower time frame on TOS, but they don't. So I gotta, where the hell is it? Is it that? That's that day. So that was 11/27. So we're gonna go back all the way to 11/27 on the SPY chart. Going back to TradingView, we're gonna go back to 11/27. So December. Holy, was it really that far back? Dang. All right. So 11/27. All right, we're in November 27. Oh, it just so happens to be this. There you go. It actually just so happened to be the same day we backtest the 50 SMA and the SPY. So right here, Alt V, right? I'm going to move it over, but right here where this vertical line's at, that day. So on that day, the market SPY was backtesting 50 SMA support. At the same time, the VIX was doing that, excuse me. What am I doing? I'm just being dumb here. Getting to that right chart. That was the same time the VIX was backtesting that 50 SMA right here. Right? So on that day, the VIX confirmed downtrend and the market confirmed uptrend, both working off their 50 SMA. So you could almost say there was a double catalyst that day. So not only was the VIX backtesting resistance, right? The market was backtesting support. Now, it's possible in that scenario that the VIX could have broke out, didn't have to reject, or the market didn't have to hold support, so on and so forth, right? But it did, right? And as a result, look at what persisted, just a massive rally off that, right? So that is more of a bottoming signal, bottoming opportunity when the markets are in an uptrend motion, all right? The other one, all right, so we pretty much covered bottoming signal opportunities when markets are in uptrends, right? Now the other one is when the markets are in downtrends, right? So when the market is in a downtrend, right, you would be looking at like oversold metrics, all right? So since you can't use an SMA, say you can't use the 50 SMA as support because the market's downtrending, right? So there isn't. The SMA would be above, right? So when the market is downtrending like it was just this past week, here, all right, so when it's downtrending right here, you can't use the 50 SMA as a potential support kind of reversal because you're below it, right? So it doesn't work that way anymore. So then something you can do is you can look at the VIX and you could use standard deviation, which is something that we like to do. Let me bring that up right now. 1 second. So this one, it doesn't work for like right here, but you'll see, right? So when the oh no, wait, hold on. I had it on the right screen. I dragged it. I almost took it away. All right, so another one we can do is we can look at the VIX here. All right. So when the VIX on the daily and the 180-day scale get into the +3, +4, so when the VIX gets to here, it's very common that the VIX is going to top out. So we use the volatility index getting to statistically overbought levels as a way to bounce the market as well. So though the market may be downtrending, and though we may not have a 50 SMA support for the market, and though the VIX would be so high above its 50 SMA and it's uptrending that we can't use an SMA rejection on the VIX, we can look at statistically overbought metrics to determine potential topping areas of the market on the VIX. And if we're able to statistically top the VIX market, then the SPY is probably going to bounce. So that's another way that we'll look for a bottoming signal on the market, is by using statistically overbought values on the volatility index, right? That's another way. So when in uptrend, we can use SMAs and SMA rejections on VIX and SPY for bottoming signals. When the market is downtrending, we can use statistically overbought values on the VIX, along with whatever other means of support, whether that be previous price action, whether it be statistically oversold metrics on the market, which aren't as common because it's just not as common on the market like that. But yeah, so those are a couple ideas for you. Oh yeah, so JP, when you're running SMAs on regular trading hours charts, the calculation is always the same, whether you looked at 5 days or 10 days or 1,000 days. The SMA value is always going to be the same, but I would recommend that you look at least 10 days back, because then you at least give yourself some previous price action to go off of. So you'll see that when I yeah, you guys are looking at the VIX chart. So I have a setting here. You can see in my saved time frames. You see the one I'm highlighted on, the 30-minute, minimum 10 days. I give myself a minimum look back of 10 days, and then you can even see. Sometimes I'll even run like 30 days back just so I can visually see, or wait, I need to turn off. No, I don't. Yeah, I'll look back, 30 days sometimes so that I can see a lot of the trend. So if I go to here, right, I can see the downtrend that started back here. I can see the uptrend that attempted here, then this choppy bullshit, then the uptrend here, then the back test, bounce, downtrend start here. Right, and then this kind of choppy to uptrend, right? So this is partly why we were just going down in the market the past week, right? The VIX, the fear increased and went into an uptrend. And then look today. Today we finally broke down the VIX. So now the fear is going away, and that's why I was telling you guys all to be long, and I have the Pepe reversal thumbnail. One of the reasons, not all, but one of, right? Whoa, the market's going up. Who would have thought? That's crazy. Not me. I want to know that. That's crazy. Also, something to think about. Remember earlier in the stream when you guys will remember, right? So earlier in the stream, remember when we were talking about, it's over, it's under, it's over, it's under, right? And then we talked about you could go, what if you went short right at the bottom here, and then you get forced all the way out, right? And I was saying that, computers and high frequency trading, they kind of run the market, and it's all about being above or being below, being above or being below, being above or being below, and there's your back test hold, and now the market's rallying off, right? So it's unfortunate to a degree because that's the way it works, and it's not super easy by any means, but it just is the way it is. Meaning that all day you're kind of going above positive, a little negative, above positive, a little negative. So yeah, hindsight 2020, right? When we look at this, we're like, oh yeah, market went over the SMA and it's just, it's an easy long, sure. But if you're sitting here throughout the day in real time, I mean, this shit went above it, then it went below it, then it went above it, then it went below it, then it went above it, and then it went below it, and then it went, right? And if you're following it, you know that it's above is bullish, below is bearish, above is bullish, below is bearish, above is bullish, below is bearish, right? You know that. But when it comes to the real time, I mean, you can have false moves multiple times before it ends up kind of picking and going. But when you're studying and you're going back and you're learning these things, it's usually going to look pretty straightforward. Like, oh yeah, I just went over the SMA and it's long. Like, duh, why wasn't I long? Well, it's because in the real time, it's like you don't always know for sure. Like, is it really going to go long? Sometimes it chops and whatever, right? So it's not so easy that, it's just, oh yeah, it's above and it's great. It's like there can be some tricky moments, right? But it is that way. It is, if it's above, it's bullish. If it's below, it's bearish, right? And if you understand that high frequency trading and algorithms and that fast paced high frequency trading computers, that they run the market, then you will realize that it's no problem for them whether it's above and then it breaks back below and it's above and it breaks, because they can execute trades just like that. You are going to have to think about it. You're going to go, well, I see it's breaking down, but is this going to be really bearish or is it going to go? They don't even care. They're just like, oh, it's above, execute, below, execute, above, execute, below, execute. They don't even think, and they can execute trades so fast and cut trades so fast that they have less slippage, you have more slippage. So this is the way it works. It's not as easy for you because the way it works is based off of high frequency trading algorithmic programs based off of simple moving average calculation. Your brain cannot do what they do that quick, okay? So it may seem kind of tricky or that at times it doesn't work. The reality is it does work. It's just you're trying to compete with computers. Okay? You're going to have to think a little bit outside the box when you're competing against computers like that. And then also, a little bit more information for you guys. Simple moving averages they're not the only thing, but they are part of, they're highly, highly used in programs for investing in the market. And the reason being is because, and I will say this, a lot of programs will not use patterns for like programs because a pattern can change drastically visually, right? So it's not easy to program, say, a trading bot to execute trades based off of patterns because those patterns can be so widely distributed, right? A bullish pennant could be a bullish pennant like 100 different ways, whether it's a bullish pennant on a 5-minute or if it's a bullish pennant that has a range of $5 to $2. It's too hard. There's too many variables to calculate and program that. But simple moving averages are the most consistent constant. They're a constant, right? So it's very programmable, all right? Whether you're looking at a simple moving average on the S&P 500 in China, Russia, the United States, Mexico, that's what it is, right? It's the 50 SMA calculation of whatever time frame, right? It's very constant. Some programs and some platforms may deviate by a couple pennies, sometimes 10 cents, 5 cents. So there is some discrepancy there, sure, but that is far less discrepancy than the 1,000 different variables of patterns that could arise in the market, right? So, so another thing, the reason I mentioned that is so that you can kind of understand a little bit more deeply why SMAs are also very important, is because they are highly, highly used in programming for strategies, because there are the most constant variable or metric that is measured and can be measured and used when programming. The 200 moving average, it's the 200 moving average, right? The 50 moving average, it's the 50 moving average. The bull flag could be anything. It could be 5 minutes, 2 minutes, an hour, 2 hours, 3 hours, how long, how high, how many troughs, how many I mean, there's so many variables there. I got a phone call coming in, so give me just a second here. Alrighty. Um, yeah, so that's pretty good. I'm gonna hop off. I'm gonna go work on my rental property. So Laura Croft. To be honest, I'm not really sure. The 100 crossing the VWAP a good signal for the long. It's not something I watch nor have really tested or looked at much. I'm sure there is value. There's a lot of value in the market that you can extract from a lot of different things. Um, Usually what you're going to see on so far what I'm showing, it's just where I see a lot of value. I'm not saying there isn't value there. It's not something I know of. But and I got to run, but the next time I'm streaming, if you pop in stream, ask me that question and I will look at it a little closer. I just don't have the time right now because I got a jam. And I'll look at it a little closer and do a little bit more of a deep dive on it. And if I see what I would say is consistent value there, then it might even be something that I would add into kind of my toolbox, but it's not something I've ever really kind of dug into too deeply. But again, if you tune in, and I'm going to try to be here more frequently, like I said, like I said, I'm redoing a rental property right now. So when that gets done, I'll probably be streaming for a couple hours after our private streams and so on and so forth. So before I go, let me just take 3 seconds not to spiel on about a bunch of random stuff and then try to figure out a little bit more closely where this market's going to go. Which I already have the plan. What did we say? It was like 590, 59. Oh, yeah. Well, we had to get above 590.10, right? 590.10, we'd start squeezing them off, right? So let's just double check that. So you can kind of see how this candle, and it's not that it's guaranteed, but you see how this candle's starting to get a little abrupt. You can see how it's kind of increasing. Let's also map this off. So 590.10. Remember we said once you get over 590.10, you can start to really squeeze it off. So the objective here for the long to work really well for the remainder of the day and then into next week is to basically not have the market come back below 590s. If the market maintains 590s, there's a good chance we're going up to 593.60, 594.50s. Also, be mindful that, the scenario I'm telling you can also backtest. A lot of times it will backtest, then fire off. So just because it rolls maybe back to 590 doesn't mean the long's off. It actually means that's a backtest trying to confirm to 593, 594. So I will leave you guys there for the day, and hopefully we continue squeezing the markets. And yeah, that's it. Hope you guys enjoyed today's streams. Yeah. Yeah, that's pretty much it. You guys have a good rest of your day. Have a great weekend. And actually, I probably won't be on Monday. Sorry, I probably won't be streaming Monday. I got some plumbing work being done at the rental property I'm probably going to have to be there for. So I won't even be on the private stream Monday or on YouTube. So probably Tuesday, if anything. You guys have a good weekend, and I'll catch you back next week sometime. Cheers.